I will now call the Finance and Responsible Governance Committee meeting to order. This meeting is being held in person and electronically in accordance with the Municipal Act. Today we don't have any public meetings, but we do have an open delegation. We have one open delegation to be received this evening from Cesar Boko, representing Centerville Homes, to request a deferral of development charges. Before we proceed, I'd like to alter the order of business to move up agenda item 7.1, DC deferral request, Serenity Lane, and item 7.2, deferral request, Harvey and Beacon Roads, to be considered at the same time as they're regarding the same matter. I will now call upon Mr. Boko to approach the podium to deliver the open delegation. And in accordance with the city's procedural bylaw, you have 5 minutes to provide your open delegation.
Good evening, everyone. My name is Cesar Balco from Centerville Homes. First of all, I'd like to thank you for the opportunity to come here this afternoon and speak with you. We are developing roughly about 650 units between Salem's and Hewitt Secondary Plan. The one we're talking about this evening is our SRO project. We've encountered many delays and coming out of COVID, with the real estate market being where it is in the last few years, lending criteria has become so difficult that we do have a lender that is in place that wants to move forward with our funding, which is great. We want to deliver these homes. We have about 65% sold. We had 100% sold, but unfortunately, due to delays, some purchasers opted to get out of their contracts. We gladly refunded all their money. We heard about a deferral program. We thought, why not approach council and see if this is something that we could defer development charges to either closing or registration of our condo corp. You may ask, well, what makes you more special than any other developer who could request this? Basically nothing. We are no different than everyone else, but we figure if we don't ask, we shall not receive. Based on what we're seeing in the marketplace and the ability to finance projects has been very, very difficult. But based on this, if we can defer, which is roughly in our projects about 4.3 million, that will enable us to be able to start our project most likely immediately. We do have other avenues that we're working on, but our best source right now, discussing with them would definitely assist us in moving that forward. We do understand the city's requirements to obviously receive development charges. I mean, in a perfect world, if they were minor or were not significant amounts that it was a requirement for you, it would help with moving projects forward, not only from obviously for ourselves, but for many other developers. So we figured we come out and it would be a great dialogue whether you decide to move forward or not to move forward with that. We think it's a great dialogue that should be had with many of the developers and with obviously even with the province to assist everyone that's working towards providing housing for Canadians. For us, probably would have been easier to have canceled this project 2 years ago, maybe even 3 years ago. But the fact that we like to see this project moving forward and providing the housing for those who have purchased the home is our ultimate goal. Even though when we talk to our banks and they feel that profit margins are not where they're supposed to be. Well, our response to them is that we have purchasers, we have people that are looking to be homeowners, and we want to bring this project through. To us, is finishing the project, building it, finishing it, regardless of what the end result is in terms of profitability. Profitability is important, but for us, finishing the project is even more important. I thank you for your time, and good evening. Any questions?
You want to just remain at the podium I think there may be a couple of questions because I know Mayor Nuttall's already signaled. Go ahead, Mayor Nuttall.
Yeah, thanks so much, and it's nice to meet you again in public here. How many units are in the building?
We have 48 townhomes, 36 are back-to-back townhomes, and 12 are traditional. Out of the 48, we have still 65% of them, which is roughly about 30 of them, still active, ready, willing buyers. Now, those people have bought at prices where they cannot purchase those homes today, and we are more than happy to deliver them at those three-year-old prices.
Okay, and so there's 48 townhomes, and how much are the DCs that you're asking to be deferred?
Total is 4.3 million for all 48 units.
Is that just the DC, or is that including the maybe parkland levy and other fees?
We've already paid the parkland. We've already paid our permits. We've already paid for parkland fees. The only is the actual development charges that are required to be paid for in order to have a permit released.
If you give me a moment here, Mr. CEO, can we get some confirmation? Is that before or after we've put the 12% reduction in that I think late last year we did? Or could we get something back on that?
Through your chair, Harvey, to Mayor Nuttall. Mayor Nuttall, in the interest of expediency, I wonder if the request from the developer could be referred to staff. As council may be aware, staff are actually working on what a deferral policy could look like for the City of Barrie. We have a number of incentives in the city right now under the CIP and under legislation that allow a number of options. But there has been interest in looking at additional options that may fit this. But in the interest of making sure that we have consistency across the board, it would be helpful if perhaps this request was referred to staff. And my commitment is we should have a draft policy in front of council, I would say within probably about 4 weeks for your consideration.
Okay, thank you. Just before we do that, or I give up the floor, I guess is what's going to happen. You're saying you'll be able to build all of these this year? Is that the foundation, or is that?
We'd like to start immediately because once that is deferred, then we can actually, permits will be released. So we can start immediately. And we could deliver the homes within 10 to 12 months completed site.
Okay. And what's, if you don't mind sharing with us, and tell me no if you don't want to share it with us, okay? What's your construction financing costs on, let's say, this $4.3 million?
So depending on at current pricing right now, we're probably looking at, it is still expensive, but you're looking at probably prime plus 3.5, depending on the lender. If we're dealing with an institutional lender like an RBC or a CIBC, which we've used in the past, they're usually prime plus 2.
So you're going to be somewhere 6 to 7.5.
I think we'd be closer to 8 to 9%.
8 to 9%.
Right now, yeah, yes. Unless interest rates keep coming down.
Yeah. And it takes you 12 months, call it, to build.
Yes, we're
so
using...
if we were deferring to occupancy, call it 12 months. You want 4.3 million, and the cost you right now is, let's use 8% as a round number. So we're saving $500,000 or something like that, a little less.
For us, it's not even so much the cost, it's how the financing structure. So when they look at that, based on today's economic outlook there and the real estate market, when the lenders look at this, they look at the total package, right? So for example, I don't mind sharing this total package for this, including our existing land loan, is a $22 million loan. Now, right. Obviously that is advanced as construction moves along, but it's just the requirements for what they're willing to finance. So for us, taking that 4.3 million out of the equation, it just makes moving forward on the financing side that much easier, because now we've deferred a cost that the lender does not have to put up, and it reduces what they call their risk.
Okay. And one final thing is what's the difference in time between when you are providing for occupancies versus a condo corp registration?
So our condo corp is a common element condo. We're probably looking at about 2 months after occupancy, or possibly we may even have the condo corp already registered based on the completion, because it's not like a full condominium where you have to have the entire site built and have 85% of the units occupied. Whereas with the common element, it works differently, where we'll be able to get registration on it. Usually, based on our past experience, you're looking at a couple of months from occupancies.
And final, if staff came back with a recommendation, would you be moving immediately then? Would you sign to moving immediately to build?
Absolutely. We can go back to our lender and advise them that, you can take 4.3 million out of the funding equation, and that will definitely, we've had talks with them already, and they said that if you can have that done, definitely is something that we can move forward on.
So I see it. So you're basically reducing your overall loan by like 18 or 20% or something like that.
Or it's the overall risk, I guess, and they look at the value, so based on its percentage of cost to loan.
Yeah.
So and that's where they'll come in and say, okay, out of the 22 million, if we're taking now 4.3 million out of it, now we're in that 18 million range. So it just, it meets more of what they look at as their requirement.
Okay, thank you.
Any other members of committee? Deputy Mayor Thompson.
Thank you, Chair. This is to staff. It might be to Mr. Gillespie. There's two options in the rental of DCs, correct? The defer installments over 5 years with interest payment, or lump sum at the beginning. Is that correct?
Through you, Chair Harvey, to Councillor Thompson. Under the Development Charges Act, yes, there's an option to pay any rental over 6 payments over 5 years. 1 payment up front and then equal payments over the next 5 years.
Okay, perfect. And just to follow up and to you, sir, if we were to defer it to occupancy, would you be looking to start the 6 equal payments at the end of that at occupancy, or a 1 lump sum payment at occupancy?
So what we were looking to do, because I think we can, occupancy could probably be at the same time as closing, but we can definitely get back to you on that, just to confirm it, where we would have direction from our lawyers to provide the funding to the city. So was not really aware of the lump sum scenario, but that's something we could look at. I know that in discussions with the lender, we thought that if we could provide an undertaking from our lawyer after every closing or upon occupancy, that we can provide, funding, payment of those DC charges.
So your intentions would be per closing or occupancy, whatever we decided on, that you would make the lump sum payment if it's
Yes.
72?
Yeah, because being that our closings are going to be scheduled pretty close to, we already have our schedule down, so we know how many closings are going to happen at a certain time. So right now, obviously, we have about 18 to 20 units that are not sold. We're waiting to start construction before we sell those, and just to give people confidence that obviously the project is being built, and we feel that once we start construction, those other ones will sell as well, and be able to close within that 12-month period.
Perfect. Thank you so much.
Any members of non-committee? Thank you for your presentation. I do have a few questions for you. So your site is actually 521 Essa Road, correct?
525 Essa Road, yes.
Now, I've been the counselor for 6 years. Your site got approved before I was the counselor.
That was approved by a previous owner.
Okay.
We purchased the site, we closed on the site at some point in COVID, during COVID. And then we launched our sales late 2020, early 2021. We launched our sales. And then obviously with COVID, we were delayed over, I would say roughly by the time we got to the permit stage, almost, I would say probably close to 2 years. So we worked together with staff. They helped, we worked well to try to get it as fast as we could to where we were. And then 2023 hit with all the interest rate hikes that totally stalled everything. 2024 was even worse. So we've been mitigating, extending, working with our buyers, wanting to stay in place to that. We have serviced the site. There's asphalt on the site. There's utilities. The site is ready to go. We've paid our permits. I think that if we wouldn't have encountered, obviously, the delays that COVID caused us, and the skyrocketing construction costs, skyrocketing interest costs, we would have already been finished the site. It's unfortunate that it was a perfect storm.
Okay, thank you. Actually, you answered one of my next questions because I was kind of confused because I know the site is serviced.
Yes.
And it's connected to the sewer and everything else. That occurred about a year ago.
Yes.
And then it seems like everything came to a grinding halt again because, yeah, the site did sit empty with no activity for a number of years. Just one piece of clarity, and the reason I'm asking this question is I actually did have a phone call from a parent purchaser of one of the homes back in the summer who had indicated to me that they thought I would have some insight on it, which I didn't have any insight, and they had indicated to me that they had received a termination of purchase agreement notice.
If the only termination agreement of purchases would be if they were, it was mutual. We did not terminate any agreements that were not mutual. None at all.
Okay. And then I guess my other question is kind of somewhat related, because it was my understanding that the same developer, whether it's your company or another company, and I just want you to confirm whether it is your company that also has the other site on Mapleview Drive West on the south side.
So we have Mapleview that's next to Pratt Homes. We have that site as well. And we also have 908, 920 Yonge Street as well. And we also have a site on Veterans Drive as well.
Okay, so it might be a different one then, because I don't know the addresses off the top of my head, but it was 5 bungalows that got purchased on the south side of Mapleview, west of Essa?
No. Ours is actually a parcel that has no access from Mapleview. It's right next door to the Pratt development, the bistro. So
Oh, yeah, okay.
they have another about I believe it's 130 homes, and we're right next door to them, and we're actually in between Ballymore Homes and them. Our engineering is almost approved, and we're just waiting for the market to come to a point where we can actually launch.
And then just my last question, because the one piece that I struggle with is because the site's been sitting basically idle for most of the years since it's been approved, other than the initial infrastructure, but now you're coming to committee advising that you'd be able to build all these townhouses in 10 to 12 months. I struggle to see how it can go from so slow over years to all of a sudden pedal to the metal and get this done.
So everything leading up to this, we have no control over how quickly we can get permits, how quickly we can get registration done. We have to obviously go along suit with how the municipality works. I mean, it's been great working with the City of Barrie, but we were in a period where things took a long time to achieve. So finally we did. We serviced fairly quickly. We've built other sites. Most of our sites are built within 9 to 12 months. This particular site will be built within 10 to 12 months upon starting. We are using a pre-manufactured wall system that will be delivered to the site already pre-built. It will be installed with a crane. Based on our construction team's timeline, they feel within 8 to 10 months, we would already have completed the majority of the structures or all of the structures. And then it's just a matter of, we say 12 months because we don't, if it's the winter, we can't complete landscaping. So we'll have to wait till the spring to complete that. But once we start our construction programs, we move fairly quickly. It's unfortunately leading up to everything else that always takes longer in this business. I've been doing it for 20 years, and unfortunately, it's always that time period where from engineering approvals to permits, it's usually what takes longest. Building it is the easy part. It's the easy part. Yeah.
Great, thank you. And just one last question, and this is actually to staff, most likely Ms. Banfield. I know there's been some mention about possibility of deferring it to registration of a condo corp. And I know we don't have any control over when those registrations occur because we have had to deal with one of those issues in my ward, unfortunately. So just wondering if you're able to advise, and if not, maybe it can be contained within the report that comes back if this does get deferred. But at this point, are you aware of what the legislation is when it comes to the timing of those condo corps having to be registered? Or if that was a clause, could we run into another scenario like we already have?
Councillor Harvey, thanks for the question. So I don't know, I don't believe there is a timeline to actually register the condo corp because as you pointed out, there in some projects for sure is a delay, but I can certainly check with legal and advise council by email tomorrow.
Great, thank you. And Mayor Nuttall.
Yeah, thank you. I think you just hit a very good point, is that like we don't want to be on a never, never plan, right? If we decide to proceed with something that defers DCs, we need to have a tangible lever to use to get the DC in hand. So I know that our public servants are working on what that looks like, but it's got to be something that's a trigger. If there's no trigger, it could be a never, never plan. And I think based on the condominium question, that's not where I want to go for sure. You've moved the other two items up, I think, right? To be included in this?
Yes, 7.1 and 7.2 are moved
Perfect.
up.
So would it be the appropriate action to the DC deferral requests, we've got to push both of them to staff to report back? I think that's what our CAO had said. So could I put that on the floor, Mr. Chair?
Yeah, just to clarify, defer or refer?
Well, I meant refer. I don't know what I said, but I meant refer.
Okay.
If I may, Mr. Chair, just to touch on what you were saying.
Actually, just 1 second, only because we now have a referral motion on the floor, sir. Unfortunately, I think we're going to cut off the questions. So yeah, thank you.
Thank you.
So we do have a referral motion on the floor. It's not debatable, so I'll call the vote. All those in favor, and that passes. We'll now move on to our presentations by staff, officers, and agents of the corporation. There's one presentation this evening from the city's investment board concerning the 2024 investment management report. Before we proceed with the presentation, I'd like to alter the order of business to move up agenda item 6.2, report of the investment board, dated March the 20th, 2025, and the recommendation concerning the 2024 investment management report to be considered at the same time as regarding the same matter. I would now like to call upon Jeff Waters, Chair of the Investment Board, to provide the presentation.
Chair Harvey, Mayor Nuttall, Deputy Mayor Thompson, and councilors. I'm Jeff Waters. It's my pleasure to do the 2024 Investment Management Report. So today we're going to look at the portfolio performance, the drivers of that performance, and probably the toughest part after the market today, the market outlook. It's pretty crazy out there. So I'd like to focus your attention on the left-hand side of this chart. And you can see those 3 bars declining. It represents 1 year, 2, 3, and 4 years annualized. And you can see for 2024, the investment portfolio earned 10.3% versus about 8.3% for the benchmark. So they beat that by 2%, and that is quite significant. But I want you to look at the 4-year number. And the 4-year number is important because that's the way they measure how investment managers do for pension plans. It represents what's called a full market cycle. You may recall when I presented in March of 2023, this is what the markets looked like. It was not pretty, not pretty. But your investment managers have managed to navigate through that, through those 2 markets. It was up in 21, down in 22, up in 23, and up in 24. And if you take all of these annualized returns, and we go back to 2016 when this whole project of the prudent investor portfolio got started, and you stack the returns one on top of another, you end up with a return of 36.7%, which is about 22% above what that benchmark would be. So again, they've done a very, very effective job of managing money for the city. So I want to just show you how we look at your portfolio. This pie represents all of the assets, 460 million as of the end of the year. And I want to focus for a minute on the operating assets, 105 million or 23%. That's the day-to-day money required to keep the city operating and liquid. And we invest that in money market instruments, which are T-bills, GICs, bank accounts, term investments. Very, very conservative, very liquid, and you can get at them at any time. The remainder of that pie is the prudent investor portfolio, which is a program that we're on right now, representing 355 million, or about 77%. It's divided into 3 parts. There's a growth fund, which is long-term. It's equities, 19%. The capital fund, 76%. And the operating fund, which is 5%. Now, the operating fund and the operating assets invest in the same thing. It's all short-term. The capital fund invests in bonds, growth fund in equities. The capital fund is actually about 11% above its benchmark. The growth fund is about 1% below, and the operating fund of the prudent investor portfolio is about 10% less than the benchmark currently. But now I'm going to show you how these components did. Now notice it says operating funds. So I'm including both the operating assets and the operating fund in that. And that is invested, as I say, in T-bills, and it outperformed its benchmark by about 0.5%. But that earned the city $8.9 million. The capital fund, which is bonds, again, outperformed by about 2%, and that provided the city with about $19.1 million of income. And then there's a growth fund, and this is where they really shot the lights out, 36.85% versus 29.32%, a full 7.5% ahead of the benchmark. And that provided the city with $18.9 million of return. Now, in total, the consolidated portfolio made $47 million. That's divided into 2 parts. RG below that 47 million stands for realized gains. That's interest, dividends, and any capital gains or losses that were from selling securities during 2024. The other side, UG, unrealized gains. Now, that is the appreciation of the securities that are in the portfolio, but they haven't been sold yet. So they're actually not what we call crystallized. They could go up and they could go down, but they're there at the end of the year. So that's what makes that up. And the consolidated portfolio earned overall 10.3%, again, about 2% above the benchmark. Now, I just want to show you where this performance came from. Top bar on the left represents the 5.3% that your money market funds earned, the operating funds. They were 37% of the weight of the portfolio, and they provided 19% of a return. Bond portfolio, and the yellow in the middle, earned you 7.2%. It represented about 50% of the assets. Now, when I'm talking about these percentages of assets, I'm talking about the average that they are over the year, because it did vary. And what they are at the end of the year versus what they are throughout the year are very, very different things. So what we've done is we've weighted those out throughout the year. But the bonds provided you with 41% of your return. And then the equities, the growth part, 36.85. It's only 13% of the portfolio, but it provided you with 40% of the return that you earned in 2024. So it did a lot of heavy lifting for you. Okay. Now, bonds did worse than equities. Equities did better than bonds. These are all the indexes. They're not the returns of the portfolio, but you can see the S&P 500 earned 36%, the TSX Composite earned 22%, and Canadian bonds earned 4%. Now, an interesting thing happened between 2023 and 2024. The S&P 500 returned over 20% in both those years, back to back. And that's only happened 3 times before, from 1935-36, from 1954-55, and then there was a 4-year run from 1995 to 1998, where every year the S&P returned 20%. And in 1999, it came really close to 20%. So it was a very unusual year, 2023, 2024. Now, I'm going to dive into how Thierry and Jason made this money. Here it says that corporate bonds did better than government bonds, and you can see that from the 2 numbers you see there, 6.48 versus 3.22. And Thierry and Jason overweighted the portfolio in corporate bonds relative to the benchmark. So they were leaning to the corporate bond side. And corporate bonds do pay more because they are a little more risky. I mean, it's not like a Government of Canada bond where you can raise taxes to get more revenues, and they can potentially go into bankruptcy. Now, they're very careful about the bonds they pick. They pick high-quality bonds, and they make sure that they understand the balance sheet so they know what's going on. But they did tilt the portfolio more towards the corporate side. Now, this looks a little complicated, but it's an interesting story. I want you to focus along the bottom part of this chart. And we're going to go back to some of the stuff I did last year to explain bonds to you a little bit. When that yellow line, or the orange line on the bottom, represents the duration or the maturity of the bond portfolio relative to the benchmark. Now, you might remember me doing a teeter-totter. When interest rates go down, bond prices go up, and vice versa. When interest rates go up, bond prices go down. Now, at the beginning of this program, back in 21-22, they were very worried about interest rates going up. So they used the fulcrum of that teeter-totter to make sure that if it was a big interest rate rise, it wasn't that bad a depreciation in the bonds. Well, in 2024, at the beginning, they were essentially neutral. And you can see that the bond market, those lines in the upper chart, the blue and the green ones, they weren't really going anywhere. But then in June, they did something very different. They raised the maturity or the duration by 2 years, so it made it more interest sensitive than the benchmark. So that fulcrum moved back. So when they got a drop in interest rates, they got a lot more leverage in price. And that's exactly what happened. And right after they did that, the Bank of Canada cut its Bank of Canada rate by 0.25%. And then they did it again in July. And you can see those lines start to separate now, the portfolio and the benchmark. And that's because they tilted the portfolio, one, to corporate bonds, but also to a much more interest-sensitive portfolio. And you can see it widened as the bond market continued. In September, the Bank of Canada cut rates again. And then they cut rates by half a percent in 2024 and another 0.5% in December 2024. So that, to me, was probably one of the major things they did to make that bond portfolio perform. Now, there was another effect too. This just shows you perspectives on the same market, but in different countries. So the top line is the S&P 500 in Canadian dollars, and it's almost 37%. And then you look at the bottom line, which is the S&P in US dollars, which a US dollar investor would see, someone south of the border, and they only see about 26.26. So there is well over 10% of the return in the equity portfolio due to currency if you're investing in the S&P 500. Now, the other thing that they did was they tilted the portfolio more towards the US market than the Canadian one, expecting it to outperform. It's about 5%. 55% was in S&P 500, and 50% was in, or 45% was in Canada. And by doing that, they picked up that extra return from the portfolio. So I think I did that last year and the year before too. So that helped as well, doing that type of lean. Whoops, hold on. So one of the other things that they did, you see those horizontal lines? That is them rebalancing the portfolio. Now, initially in 2024, they were doing what are called sector ETFs. Now, ETF stands for Exchange Traded Fund. So it's just a broad group of stocks. And they were doing sectors. So they were in the defensive sectors like utilities, telecommunications, consumer staples. And they were noticing that they weren't starting to track very well to the markets. And what they did was they sold those sector ETFs and they bought S&P 500 ETFs so that they more track the market. So they're getting the full 500 stocks of the S&P 500. The other thing they did was on the Canadian market, they were invested in the ETF which represented the TSX 60, which are the top 60 stocks of the stock exchange in Canada. And they were noticing again that they weren't tracking as well, and they were noticing also that some of the smaller cap stocks and some of the sectors that they wanted to be in weren't well represented in that TSX 60. So they sold the TSX 60 and they bought the S&P Composite Index. They went from 60 names to 237 names and gave a much broader scope of names. And they were getting more mining stocks, more gold stocks, more oil stocks, which is what they wanted. So those were all the factors that went into 2024. I've been in the investment business well over 40 years, and I would say that you have a couple of very, very good investment managers sitting right here in the room that have done an excellent job for the City of Barrie. Now I'm going to come to the real hard part, especially after today. The swings in the market with this tariff stuff is driving me crazy. I invest money for myself as well and for some family members. My first note here that I have on my little cheat sheet notes is Trump chaos, and boy, did we ever get it today, and all in the last 5 days. So we're going to continue to see a lot of volatility. But there are some issues here that we really should think about. Inflation. Tariffs cause inflation. There's no question about it. The other thing is recession is not quite here, but they're quite worried because consumer confidence in the United States is dropping rather rapidly. And they're also noticing some economic things that aren't quite as robust as they used to be. So the question is, if you're a central banker, what are you going to do? If inflation starts to heat up, do you raise interest rates and risk creating a recession? Or do you leave interest rates as they were and worry about inflation going up? So I really wouldn't want to be Tiff Macklem of the Bank of Canada or the governor of, or the head of the Fed. It just, you're kind of in an impossible situation. But the one thing for sure, we think the Canadian dollar will continue to remain weak given our trading position against the US, and it could get weaker. I mean, it has been much lower than it is. It's doing a little better now, but certainly I wouldn't bet on a big rally in the Canadian dollar anytime soon. And Chairman Harvey, that is my report, and I'm willing to field any questions from the committee.
Great, thank you for your report. And as you said, I am very pleased that we have a good team of people managing this money and coming back with good returns. And obviously, It sounds like it's very sound investments because we're not seeing the crazy returns that you spoke about, but we're seeing very nice moderate stuff, so it's not as volatile. And like you said, we're in a whole different world right now, and hold on for the ride, and I'm sure we'll all survive. With that being said, any members of committee with any questions? No? Any non-members? No? Councillor Corser.
Thank you. Through you, Chair. I watch way too much Bloomberg in my spare time, and I just try to figure out what's going on. So, because I'm like a news junkie, so I noticed that I saw the Canadian dollar was kind of eking up in the last few days, and it concerned me because I know that we always do better when the Canadian dollar is down, usually when it comes to trade with the States, business with the States, but that's kind of going haywire, and we can't even tell what's going on anymore. It's like on the whim. But I did want to ask about holding steady. I don't have anything in the stock market, but a holding steady or kind of running for safer ground at this point because the volatility is so bad, especially when, like, I understand that energy stocks are going down, like oil is going down, gold's going down. Like, how does oil and gold go down at the same time? I thought they always were opposites, and it just seems like, and again, I'm armchair trying to figure things out. So looking forward, what is the plan? Is there a plan for dealing with the volatility of the stock market right now?
Through Chair Harvey to Councillor Corser. My experience has been, don't panic. I think someone said it, don't just do something, stand there. It's, I've been through a number of these market cycles. I was 4 years into my career as a portfolio manager when 1987 hit, and that was quite something. And the best thing that we did was not to panic. In fact, we were trying to shift from being heavy in bonds back to stocks, and none of the brokers would pick up the phone because they were afraid we were trying to sell stocks. But the one thing I have noticed is that if you go out over time, and the really exposed part of this portfolio, to your question, Councillor, would be the equities. They're the most volatile. The bonds are not as volatile, and I think the trend in interest rates continues to be downward, maybe not as fast as we would like, but they should be downward. But if you go over a 10-year cycle, it doesn't matter when you've bought. For example, I've got some interesting notes here, if I can find them, just to give you some idea, that it's best not to veer away from your plan, your long-term plan. Stay with your long-term plan. Jason and Theory can alter the amount of equities they have in there, but I don't think they're ever going to get complete out of them because then you have to figure out, well, when am I going to get back in? You have to time it on both sides. So it's best probably to go along for the ride. This too shall pass. We got through COVID. We got through the financial crisis. In fact, if you bought before the financial crisis and held on through to now, you're still way ahead of where you would be. And this is a long-term investment plan. The city has enough liquidity, sitting at that 100 and some million that it's got, to be able to manage through, and we can always sell bonds where we need to sell bonds or sell equities, but it would be a mistake to go at the exits.
If I may. Also, I hear a lot of people feeling that, of course, when the markets are down, to reinvest. Is there any conversation about expanding investments right now, or are the market's just too volatile to actually get into any extra stocks or anything at this time?
Through Chairman Harvey to Councillor Corser, we don't actually buy stocks. We buy ETFs.
Yeah.
So the risk lies with the market, not in the individual selection of securities. And that's done on purpose because that portion of your portfolio is not exactly huge. And to get a diversified portfolio on this scale would require a lot of work for a very small portion. I mean, this is the growth portion. We don't want it to be, I think the maximum we can go to is 30% of all assets. All the rest has to be in bonds or in treasury bills and short-term instruments. So you've got quite a nice, and we can take stocks all the way to zero. I don't think we want to, but it's something that is open. And We had designed the investment guidelines for the managers so that they're fairly broad and they don't tie their hands on anything. So we want them to be able to have the discretion to operate. And if we try and say, well, you should be doing this, that kind of ties their hands. And I had a client once in my career who changed things and then later regretted doing that just because things took off again and they panicked and said, let's change.
Well, through you, Chair, thank you so much, because like I said, I am an armchair person trying to figure all this stuff out. Actually, a long time ago, I was really silly and I did a little bit of day trading, which was really irresponsible. And I always enjoy when you guys come in because I love having, learning a little bit more because I like the education. Thank you very much.
Chair Harvey, thank you.
Thank you. And actually, I just have one question. Just on the equity side of things, opposed to having the equity side more North American based, is there any thought around diversifying where it's into more international markets to potentially smoothen the blow, let's say? I don't know what your thoughts on that are.
Chair Harvey, they have full discretion to go anywhere. The only issue would be that the benchmark is 50% Canada equities and 50% S&P 500. So they would be going outside that benchmark. But that's a call that they can make. We don't restrict them going anywhere in the world. And that was purposely done in the investment management outline and guidelines that we put in place because, again, you don't want to tie someone's hands and sort of hobble their efforts to make money. And to change the investment guidelines and investment philosophy, I think, is something that we got through that. It was a lot of work, and it was designed so that we don't have to change it to any great degree unless something really changes, but I doubt that would ever happen.
Mayor Nuttall.
I just wanted to ask if I could put 6.2 and 7.1, or is it 7.1? The approval of the 2024 investment management report. So 7.1. 6.2. Okay, 6.2 it is. On the floor, and I guess just wanted to say thank you quickly before we moved on, and to Tier and the team, thank you. I don't have any questions, but I do want to say thanks because the returns are incredible. And going back, I saw a smirk from the CAO because of 2016 was in that chart, which I think was going on 0.4 or something like that % return. And so the many times more return we're receiving than we did a decade ago. Like how far to come in 10 years. It's something to see. So thank you. And because it's the minutes, do I even have to put it on the floor?
Sorry, go ahead, Madam Clerk. I was kind of tied up with Deputy Mayor for a second.
Through you, Chair Harvey. Yes, because there is a recommendation from the committee that has to be approved. So that would be the approval of the investment management report that's part of the minutes. So we'd have to approve that recommendation.
Sounds good. Thank you. Then that.
Okay, with that being said, call the vote. All those in favor? And that passes. And again, thank you very much to you and your team for all your work and another very thorough presentation. Thank you.
Thank you very much, Chairman Harvey.
So we can now move on to 5. So there's 3 referred items on the agenda this evening, 5.1 and 5.2.
Hold, please.
Actually, you don't necessarily need to
it's
hold
the
them
committee,
yet.
sorry.
Yeah, go ahead if you'd like to speak to either of them.
Yeah. I'm just
Or if
preparing
put
for
them on the floor
general.
as printed.
I'll put them on the floor as printed, and in light of new information, I'll refer these back to staff.
Okay, so we have a referral motion on the floor, which is not debatable. I'll just pause for a moment because the mayor's tied up for a sec. Oh, you're good? Okay. So all those in favor? and that passes. And then moving on to 5.3, which is motion 25G019, referred General Committee dated January 22nd, 2025, Conservation of Built Heritage Community Improvement Plan, and can I have somebody put it on the floor, please? Thank you, Deputy Mayor.
Oh, I'll put the motion on the floor as printed, and I'll defer this to the next Finance and Governance Committee, Responsible Governance Committee, as the Chair of Heritage is Councillor Kungle, who's not here tonight, and she had something that she wanted to speak to on this, so she was unable to attend. So I'll refer it till the next Finance and Responsible Governance Committee.
Okay, so we have a deferral motion, and the next meeting would be April the 30th. I don't know if there's any debate. If not, I'll call the vote. All those in favor? And that passes. And then we have the report of advisory committees. There's one advisory report committee to be received, and that's the 6.1, the report of the International Relations Committee, dated March the 4th, 2025. Can I have a member place the item on the floor? Thank you, Deputy Mayor Thompson. Any questions? Okay, I'll call the vote. All those in favor? And that passes. We've already dealt with that, so now we're at adjournment. This concludes the Finance and Responsible Governance Committee meeting. This meeting is adjourned.